All right. Good morning, everyone, to today's online panel discussion on the topic, the new planned EU regulations on crypto assets. As it was recently announced last week, the regulatory framework by the European Commission, we have spontaneously decided to organize an online panel discussion, and we have invited the esteemed gentlemen on the panel. Of course, each of them will be introducing themselves, but I'd like to introduce them just very quickly. We have Dr. Philipp Sandner from Frankfurt School joining us as a moderator, Dr. Joachim Schwerin from the European Commission, Mauro Casellini from Bitcoin Suisse Liechtenstein, Alireza from Annerton, and Robert from APCO Worldwide. The structure for today's online panel discussion would be a quick slide by Professor Philipp Sandner, followed by a 5-minute presentation from Dr. Joachim on the regulatory framework, and then we kick off the online panel discussion. If you have any questions, please feel free to share them in this WhatsApp group, Bitcoin and crypto assets. Just scan them using your camera with the QR code. And if you have any discussions or any questions that you would like to reserve later after the panel discussion is over, please feel free to write them there, and the speakers will be very happy to continue answering them for you. So that's it from my side. Philipp, I hand over to you right now.
Excellent. Let me give 1 second to get started. Here it is. So you should see now one slide, right? Can somebody quickly tell me if you see the slide?
I can see it. Yeah.
Yeah, perfect. Yeah, thank you, Ragu. Very nice that you're organizing this topic. I think people are still in the mode of reading these 170 pages of the MiCA regulation. So demand for this topic will definitely pick up in the next month, I would say, so maybe even in the next years. But it's good to discuss it in these early times to also get a good view with you guys from Liechtenstein, Switzerland, Germany, Belgium, or Brussels, and therefore I'm looking very much forward to this discussion. So let me give you one word about the MiCA regulation, what it is. I tried to really summarize everything in one slide. It wasn't a very easy task to do. 170 pages of difficult to read law stuff, putting it in one slide, it was not very easy to do, but I gave my best, and that's basically what I came up with. So what you see here in dark gray, that's basically the MiCA regulation and all crypto assets which are covered by it. And here crypto assets, you can see it, it's basically a catch-all category, for example, for Bitcoin, Ethereum, and so on. This stands next to security tokens, which would be digital securities. You see that these are not overlapping rectangles, which indicates that crypto assets are a separate category next to digital securities, which are not touching each other. That's interesting because with this, a new asset class next to digital securities is now existing and potentially growing, even though, of course, it's absolutely tiny and small compared to digital securities out there covering, I don't know, 99.9% of capital markets, right? So, and now let's have a look at what's happening inside these crypto assets. First of all, security tokens, I think that's clear, covering shares, bonds, funds, and so on. And e-money, now that's the euro on a blockchain, would be able to be realized in the traditional way without DLT. That's already known. That's companies like Revolut and others. And on a blockchain system, this is what the European Commission would call EMT token. Then there is an asset reference token, which is also basically a stable coin, but not necessarily pegged to the euro, could also be gold or something else. And there is the utility token, which we all know from the ICO craze at that time, right? So here are some examples which could potentially fall in this category. DAI probably would be an art token. The US dollar coin, once applying for an e-money license, could be an e-money token. And among these categories, which are stable coins, there is the category of significant tokens. That's basically a subcategory requiring special hurdles in terms of regulation. This seems to be done to encounter Libra and basically get Libra in the right regulatory regime. Yeah, that's it. I think that's one trial slide to basically organize what's done in the MiCA regulation from a categorization scheme, but of course the regulation includes much more concerning service providers who are doing custody, trading, and all kinds of services in crypto assets. With this, I would like to hand over to Joachim from the European Commission, who wants to also quickly highlight a couple of things to the MiCA regulation.
Well, many thanks, Philip, and I can tell you that you did an excellent effort in putting 170 pages on one slide. I'm Joachim Schwerin. I represent the European Commission's DG GROW, which is the Directorate General for the Internal Market for Industry, Entrepreneurship and SMEs. And in this DG, I'm responsible for SME access to finance as regards the digital economy. So everything from digital finance, crypto assets, token economy, etc. I don't have a formal presentation because I think your slide fully suffices, Philip, but I would like to spend 5 minutes very briefly to explain a little bit the process and also the future, because what we discuss today here is actually very small part of our activities as regards blockchain, and I think we should put this in perspective. We have a long track record of engaging in a pro-innovation way on blockchain. 5 years ago, we did a big brainstorming in the Commission to look at what are the future priorities for Europe in terms of technology. A lot of people proposed blockchain. I proposed blockchain not for applications in finance, but for the real economy, because we see the main potential of DLT technologies in the area of industrial and real economy applications. I should say at the outset, when I speak about blockchain, I mean DLT in a broader way, of course, but for the ease of reference, I talk about blockchain. And second preliminary remark, everything that you will hear today from me are my personal comments, so it's not necessarily an official position of the European Commission. Now, we wrote this report, which we published in 2016, and we identified blockchain as one of the 4 major breakthrough technologies in Europe, which means that every policy field needs to adapt to the realities of blockchain and actively promote it. And this is the approach that we've taken since. A very pro-opportunity, pro-innovation way. And you know all the history that has come up after FinTech Action Plan in 2018, the Blockchain Observatory, EPSI with the various activities, INATBA, where we have several organizations represented today also on the panel, and all the activities there. We did a lot in terms of financing blockchain projects. We work on standardization. We have a very, very broad remit as regards the active promotion of blockchain technologies as such. About a year ago, there was a specific situation because we got a new commission under President von der Leyen, but also there was a big political discussion, as everyone knows, on certain global stablecoins. And that put an interesting, I'm not saying dilemma, but a sort of problem to solve. On the one hand side, we have this pro-innovation track record as the European Commission. On the other hand side, there were a lot of politicians, other organizations that were concerned about global stablecoins. Now, as the majority of what we call now crypto assets has not been regulated so far, there are certain that fall under MiFID as financial instruments, there are certain e-money things as such, but the large majority of utility tokens, etc., had not been regulated. One of the first steps of the new commission was to announce that we make a regulation on crypto assets for everything that has not been regulated before. And we define that very broadly. A crypto asset is a digital representation of value of rights that can be stored or traded on a blockchain, basically. So within less than a year, we put now MiCA on the table. I think that is relatively fast, given that we have certain obligations. For example, we needed 3 months to consult the public. Everyone had a voice in this exercise as well, received about 200 contributions. But also, of course, we did other things. And in fact, the digital finance strategy that we published less than 2 weeks ago is a whole package that is already standing in a row of events. We started in February with a digital package where we discussed data and artificial intelligence. In March, we had the SME strategy and also the industrial strategy, which is important to note because SMEs are more than 98% of enterprises in Europe. And as we take a bottom-up approach, it's very important to activate those. And we have already 2 very concrete blockchain applications or initiatives in that SME initiative. The one is education, Philip, which I know is very important to you, but also to many of us. The second is access to finance, where we will have an initiative of enabling blockchain bonds to come along as a first step towards, let's say, the adoption of new financial tools for SMEs. And then now, 2 weeks ago, less than 2 weeks ago, we have this digital finance strategy, as we call it. It's basically an umbrella document, which is the successor of the FinTech Action Plan. Then we have this MiCA regulation that we are discussing today and to which we are coming in a second. We have a pilot regime for market infrastructures on DLT, which is especially interesting, of course, for exchanges. I see Börse Stuttgart here, but also others that certainly take an interest in that. We have a regulation that amends 8 existing regulations or directives, including MiFID II and Insolvency II, for a number of things that need to be clarified. We have the whole area of digital operational resilience, which we need to take into account for cybersecurity. We have a retail payment strategy and everything. So I think by now I have confused everyone enough to really see that you not only have to read 170 pages of MiCA, but you have to have thousands of pages of Spectrum. And for the rest of the day, we condense that to the basics that you need to know, which in essence is very simple. And I think one last remark before I come to that, because some people do not really fully understand the political process in Brussels as such. MiCA, of course, doesn't mean that these rules apply as of today. This is a proposal from the European Commission, which will now be discussed in the European Parliament and in the Council. And it should be adopted by 2024, probably, we hope, earlier. But it will take a while for the political process to change certain things, to agree on what will be done, and then to implement that. As soon as it will be adopted, there are certain transition phases, not for stable coins and stuff, but for the majority of utility tokens that we probably discuss here. There's a grandfathering clause, so it's not that anyone needs to panic right now, but it is the start of a new process where we hope that everyone engages into discussions now to see whether what we proposed fits with their business models, what things should be changed, etc. to discuss. MiCA takes a risk-based approach. So we're not regulating, I would say, everything according to silos of activities, but those things that we consider as less risky, as more pro-innovation, are very, very lightly regulated, and things that, especially in the political domain, I'm not saying from the European Commission, but in the political domain, as we need to get the Council and Parliament on board, are regulated in a tougher way. So MiCA stands beside MiFID, but it's not financial instruments. And therefore it's a lighter regime. And perhaps last remark on that, because otherwise we lose ourselves in details. There is a 3-tier approach, which I find very much pro-innovative and which I find very light in terms of regulation. So if you are to issue crypto assets, you have to produce a white paper. The white paper should be sent to the authority 20 days at least before the publication, and then you can proceed. So you don't even need to wait until the regulator approves. And once you have done that, actually you are passported across the whole union. So that's completely new. It's even better for smaller projects. For certain types of crypto assets that we define in Article 4, you don't have any regulation at all. So for example, when the project is less than €1 million, or where it's only, I would say, in order to ensure the integrity of a blockchain and for mining, etc., or if it's given for free, or if it addresses, let's say, qualified investors or small amounts of investors, you don't have any regulation at all, which is a completely new element, I would say, in terms of what we're discussing here. And only when you come to the domain of stable coins and e-money tokens, then you get a sort of stricter regime, but that doesn't mean that we are opposed to stablecoins. Absolutely not. Stablecoins have proven useful in many contexts that we see, but of course there are certain concerns that we need to address, and we want to regulate them in, not out. So also that is not a prohibition of anything. I think I should stop here in order to put that into context, but it's very important to see how you can also engage to this process and to what other things it links.
Yes, thank you very much. That was for myself and also from you, Joachim, a little bit of an introduction, but I think it's needed to basically provide the context. But I could also have put it in the first question to all of you. Okay, now I would ask Alireza and also Robert and Mauro to quickly present themselves. Who wants to start? Alireza, would you like to quickly present yourself?
Sure. Thank you, Philipp. And first of all, thank you for having me on this panel. It's very exciting to talk to you today about this new interesting topic for all the crypto market players. I'm Alireza. I'm a lawyer from Frankfurt. I'm active in regulatory advice, providing regulatory advice to regulated institutions like banks and financial service providers. And I'm also focusing on blockchain since 2014. Advising blockchain market players. And besides that, I'm a member and founding member of Think Blockchain, a Luxembourg-based think tank, which is a member of INAPA, where we are heavily involved in creating new ideas on regulation of crypto assets and helping also in the development of MiCA and other laws.
Excellent. That's perfect. So you're having the European and the German perspective. Okay, Robert, what about you? Would you also want to quickly present you and Blockchain for Europe?
Yes, with pleasure. Thanks for the invitation. Very much appreciated. As Rago said, I also represent APCO, so actually working for a consulting firm that supports the Blockchain for Europe initiative. I'm the Secretary General of this institution or this entity. And we represent a number of global blockchain players at the European level and in the member states. Whenever there's, regulatory debates going on, we're happy to contribute also today, and in particular at the EU level, as the name says. And we're very much focusing right now on the digital finance strategy, MiCA, and the pilot regime in particular, but also payments and so on. And we're always happy, to participate in events like this that help people to better understand the environment they're operating in, because what we're still seeing in a lot of occasions, and actually the Commission here is like the shining lighthouse in this darkness that did a great job on this. But when you look into the parliaments, not only at the EU level but in the member states, and you talk about blockchain or Bitcoin, even like all these words that are floating around, people are still mixing up a lot of these things or are having misconceptions about them. And that makes it very difficult, I think, for all the bodies involved to have a proper discussion about this issue, because if you don't understand the basics, it's very difficult to discuss the technicalities. That's why we're very happy to contribute today and on every other event that comes.
Excellent. Yeah, and with Blockchain for Europe, you are basically extremely well connected to the European Commission, and you also basically understand the difficult process of how regulation in general came about. Especially, it was not just MiCA, but also an entire package with hundreds of pages of rules. Okay, and then finally we have Mauro from, I think, Liechtenstein right now, or Switzerland. I think it's Liechtenstein, from one of the legacy crypto companies, so to say, a large one in Switzerland. Please also present yourself.
Yeah, Mauro Casellini, CEO of Bitcoin Suisse Liechtenstein. Bitcoin Suisse itself is a blockchain financial service provider active in the space since 2013. So have seen a lot of different cycles, and even in since 2014 regulated in Switzerland, and we have seen pretty soon that regulation will hit the space. So we are working in Switzerland on a banking license and in Liechtenstein to have access to Europe. And therefore, I mentioned it in the beginning shortly when we only were a few people. With MiCA, that's the best thing that could have happened to us, because we would like to passport all our services all over the EEA and the EU, and therefore we need a European regulation, and MiCA does exactly that. And I really like to see what's in there, for example, especially in relation to the e-money token. We spoke in Liechtenstein, I think 4.5 years ago, how we could bring Tether to Europe when Tether was still 100% officially backed. And the decision was it should be an e-money token, otherwise it would not work. So happy to discuss.
Excellent. Great to have you all here. So let's finally start in the discussion after this introduction, which, as I think, was really necessary. So maybe one of the first questions going to you, Joachim. The finance ministers from France and Germany said that they would like to prevent Libra at all, right? And I think one day previously or afterwards, the MiCA regulation came out basically saying not the opposite, but basically saying that Libra could be okay if you are complying to the rules. So how does this conflict. Who basically will be right at the end of the day? Is it the MiCA regulation potentially allowing Libra once regulatory hurdles are being met, or the finance ministers, I think, from 5 countries telling us quite clearly that they would like to prevent and forbid and prohibit and so on crypto assets?
Well, Philipp, I'm representing the Commission, so I think the Commission got it right, but I'm not, of course, commenting on what the finance minister said. We've taken note of that, and of course, it's very important also given to the decision-making in the Council. I think as a preliminary remark, one should distinguish 2 things. One should distinguish the merits of crypto assets, including stable coins. And on the other hand side, one should look at certain potential problems, which in my personal opinion, do not really form part of that crypto asset universe. When I see discussions on certain global stablecoins, I see more competition problems. I see issues of potential dominance and abuse of dominant position. I see foreclosure. I see certain risks that are more from a competition perspective. I also see risks that, of course, finance ministers need to address as regards to monetary policy. And while I'm not giving my personal opinion on this here, I think that it would be fair to distinguish between these things. What we say is whoever complies with the rules set out in MiCA is welcome in Europe. And that includes everyone. But of course, that is something where people need to decide which activity they want to engage on. We will now have the process, as I just mentioned, where that will be calibrated. The Parliament, as I take it, has a very much pro-innovation view, at least as regards to rapporteur and leading people there. Some countries see that differently, but we have 27 countries, 5 wrote a letter. So we need to see how that discussion will be going on at the end of the day. One remark that was made a few minutes ago was very pertinent. People need to understand what we are discussing here. If you, for example, analyze the events that happened in March of this year, where the exchanges went down and where we had a lot of, let's say, turmoil on financial markets, certain stable coins played a very positive and productive role to stabilize crypto markets. And people need to understand that. People need to look into the details. It's not that a stable coin is a stable coin and all of that is bad. By far not. We are now discussing a certain example of a stable coin that isn't even active, that has already changed over the last couple of months and years in terms of the business profile that it wants to set up. We should not have the large majority of crypto assets that are very, very much positive, pro-innovation, pro-industry, pro-business being hijacked by that discussion. And therefore, we took the approach that we basically took. We stand fully behind that. I think we are gaining forces behind us that not only see this as a blueprint for the EU. I'm very happy about the view from Liechtenstein. I have, Philipp, as you also know, a lot of discussions with the authorities in Liechtenstein, and they give me signals that actually MiCA perfectly complements what they've done with their token law in Liechtenstein, and that is also our objectives. It looks very much differently because we have to take, of course, the architecture of our regulation into account and not do something completely new. But if you read it, you see the complementarity of that. And then there's a lot of people, I think, also outside Europe that realize that our approach is based on certain values that they share. And it's a different approach than that taken in other areas. It's an approach that is really for the small enterprises. It's an approach that ensures also integrity of data and protection of data. There's the whole area of digital identity, which we are now discussing and which we also addressed in this package. And I think it's put into a certain context where at the end of the day, the whole momentum of what we are doing here is much stronger than certain concerns that come out of the legacy system.
Okay, excellent. Yeah, thanks very much. So, and then as multiple people have said, it's a very lengthy regulation, 170 pages and so on. So Alireza, for you as a lawyer, was it easy to understand? Was it difficult to read? What is further expected in delegate acts? So another 100 pages and so on. So where are we in the process at corporations? Are they still reading it? Have they understood it yet? Do they first need to do a blockchain basics course to be able to understand what's going on here? So what is the, let's call it, what is the status of understanding and adoption in your mind? You're talking to a lot of clients, right?
Yeah. So yes, Philip, before answering your second question, I just wanted to add one more comment on your first question regarding Libra or Calibra. As all of you know, Libra or Calibra is located in Switzerland, and as such, the regulation is not directly applicable to Switzerland. I mean, most likely Calibra did it by purpose, choosing Switzerland as a neutral country to enter the wider European market, and maybe they will then launch a subsidiary also in Liechtenstein or somewhere else within a EEA, within a European Economic Area, and only then they can passport their activities through the European market. This to Libra and Calibra. And regarding the regulation, yes, the MiCA regulation was for me not very difficult to read, since we at INATBA and at Think Block Tank, we were involved in the consultation process. We had a first look during the consultation of what we're going to expect with the MiCA. Plus, what is very interesting, the MiCA already reflects something we have in Germany, which is the crypto custody service and the definition of crypto assets. Even though in Germany we are a little bit different in defining crypto assets and also in regulating crypto assets as such, and also a crypto custody service. But based on our understanding that we had already in Germany from the beginning of this year, this law being effective, we didn't have that much difficulties to read these pages. So, and especially also we are familiar with MiFID, and MiCA is similar to MiFID. I would say it's not MiFID, but it's similar in the structure, and hence it was not that difficult for me as a lawyer, or for us as Think Block Tank members. However, looking at the overall market in the European Union, especially also in Germany, some are a little bit concerned. Especially also on the understanding of what is a regulation compared to a directive. So a regulation would be directly applicable to all EEA member states rather than needed to be implemented within each member state. This is the first thing, which is a little bit surprising also to me. The second thing is that we already have in some EU member states, such as Germany, Liechtenstein, Luxembourg, and other EU member states, already some crypto regulation. So therefore, the question remains of which law will be lex specialis, we would say, which law will be directly applicable and which law will not be any more applicable compared to the EU law. And I would say, okay, we have a regulation, therefore it is clear to me the regulation must be enforced in each member state, and there should be no domestic law next to it in parallel. Therefore, it will be very interesting to see how this is going to change. And the third thing, with respect to the members or to the corporates within the European Union, of course, some of them were thinking of doing the so-called regulatory arbitrage to choose a jurisdiction like Liechtenstein, where the legal framework is a little bit easier to digest, where the regulation is a little bit lower than compared to, for example, Germany. However, putting in mind that if you want to market your products to the entire European Union, it doesn't really matter where you're located. You should comply with the entire EU law rather than looking at one jurisdiction. Therefore, I think all the corporations should very quickly or very soon try to fully understand the MiCA and also the other laws and changes we're going to see with the EU package coming.
Okay. I think this was an interesting point we really have to emphasize. I think Mauro is the perfect person to answer it, because with many things in Europe, we have fragmented markets according to local countries. For example, also with securities, right? You cannot basically it's not too easy to have one security out there, one stock, one bond, which is basically applicable to any EU country out there. Of course, there is the passporting regime and so on, but it's a workaround because it has to deal with how Europe has been built, right? And with the MiCA regulation, we now have, I'm not a lawyer here, to be honest, but it feels like that we have one of the very few early regimes where we have an pan-EU-wide regulation of one kind, one sort for 450 million people, right? That's how it feels for me, but you have to verify it. Mauro, what's your outside view on this? Is this correct? You know, is this something new we see here, like a pan-EU-wide regulation, Bitcoin is this category for this entire continent?
Yeah, for me, it's nothing new. If it's MiFID for crypto, it's MiFID is fully regulated. Is the security regulation all over Europe, all over the EEA, EU, and that's the same now with crypto. And I really like that. And for me, it would be really great to discuss, especially the German way, how they have done it. Is the regulation of the crypto custodian now obsolete? Should they go back? That's my question here, because if I look at MiCA and if I look at what Germany has done, Germany is way more regulated already now than what MiCA will do. You need to be a bank or an investment firm to be able to trade crypto. Crypto is a financial instrument, even if it's Bitcoin or it's a utility token, that's not relevant. And with MiCA, that will be differently. How do we see that in the context? Because is Germany at the moment over-regulated? How do they need to react? Especially that's an important question for me, because as soon as I'm a bank in Europe or in the EEA, I can sell all my services, my regulated services all over Europe. I can passport them. Crypto will be difficult. I can trade them because I'm a bank, but at the moment, I would need a crypto custodian in the bank. And that one needs to be regulated in Germany. So how can I go on here? And that's for me the interesting thing, because with MiCA, it will be no problem anymore. But until MiCA is there, possibly I need to partner with a crypto custodian in Germany or be one by myself.
That's an interesting point. Let's take this question and directly forward it to Alireza. As a German lawyer, how is MiCA in the German regulation so far conflicting? Well, we should have to keep in mind, that Germany created this license back in January. MiCA will be there end of 2022 or even later. So at least for Germany, it provides some security or certainty, that's a better word, it provides some certainty for these couple of years where, for example, Bitcoin and other currencies might rise again before MiCA comes into place, right? Alireza, what's your point here?
Yes, I mean, you're right, Mauro, in saying that the German regime is different. It is maybe more strict than MiCA, I would also say, especially putting in mind that in Germany, we are also now coming with the draft law of electronic securities, where we will add another service next to the crypto custody service, which will be the crypto register keeper, which will be another regulated service. So in Germany, the definition of financial instrument, we have two definitions of financial instruments. One definition, which is according to the German Banking Act, and one financial instrument, which is according to MiFID. As Joachim said in the beginning, crypto assets are as such not really a financial instrument in the meaning of MiFID. If there would be, then already MiFID would apply, not MiCA, not the special German regulation. So with all the other assets, especially also cryptocurrency, which in Germany is regulated already before we had the new law from this beginning of this year. In Germany, we have a special case in dealing with utility token and currency token, and also in respect of custody services. And I believe that this will coexist or exist until the implementation of MiCA and 18 months afterwards, because this will be the period until when each member state should make sure that they are fully comply with the MiCA regulation. And I think until that time, the German regime, which is more strict, some would say it's maybe gold plating after we have the MiCA regime, they have to, at least if they target the German market, to comply with both MiCA and the German regime. And I believe once the MiCA is fully implemented within the European Union, and also as such in Germany, the German special regulation as such will not exist any longer. But it will be also interesting to see if maybe the MiCA draft will change, if some services may be added, like the crypto register keeping services or something will change to become more similar to the German crypto regulation regime. But coming back to your question, Mauro, I believe that the German regulation will still stay and coexist until the full implementation of the MiCA.
But, to be honest, I think it's, we know it from Germany that these days there should be, like in a couple of weeks, the first companies being announced. And what I have heard from companies who want to get this license, which is out there, even startups which have been founded last year were able or probably will be able to get this license. So the effort to get this license is basically feasible. You don't need to be a large-scale stock exchange to get this license. That's my personal opinion. So, but still, it is conflicting and it needs to be resolved at some point of time. That's a good point. But Robert, we have to ask you again. Otherwise, you will not be part of this discussion. Therefore, I would like to pose you the following question. Do you see that this regulation has a quality that basically hampers innovation, or the opposite view that basically is the base and the fundament for future growth? What is your judgment on this? Plus, do you think that even with the same way we saw it with GDPR, where everybody was extremely skeptical, people saw like that entire Europe is driving against the wall and crashing because of GDPR, and at the end of the day, the opposite happened. Basically, other countries created regulation orienting towards GDPR. That's basically exporting regulation from EU, which is a little bit strange, but apparently this happened. Would you see this also happening with the crypto world? For example, the US or Asia or other countries adopting the crypto asset category set out in the MiCA regime. What's your opinion about exporting regulation and regulation as a fundament for growth?
Thanks for those two very easy questions. I will think it's both a yes, yes, and yeah, that's it. No, just kidding. It's obviously much more complicated than that. It's, I think, a very complex system we're operating in right now, because, you know, as Joachim outlined, there's a sensible approach by the technical experts, let's say, and then there's a political approach by the elites that run government structures or governments and financial ministries, etc. So I think there's a bit of a disconnect there. I think the technical layers of the European regulators, like experts in the Commission or the BaFins and IMFs and FCAs in this world, I think they get it very much right, and they did a great job on this. When you look into the MiCA, I think on a horizontal or a broader level or high level, it's a very good regulation. The devil is in the details, like with everything. And I think there's, you know, some questions about tech neutrality in there. Then the point of security tokens has been addressed already to an extent, because the difference between MiCA, which is a regulation which harmonizes everything around Europe, which is a very positive thing, and I think the industry broadly supports that. When you look at the MiFID pilot regime, which complements basically MiFID and other regulations or directives, and the definition of securities, for example, is something that is up to the member states themselves. So you have currently 27 definitions of what a security is. Therefore, you will probably have 27 definitions what a security token is. So this doesn't actually help innovation to grow. So this sector probably is not in a position where we should be taking out the flag and pretending we're the front runners. On the other side, I think MiCA definitely has the potential to be the state-of-the-art regulation around the world. And the feedback we got also, we're very much in contact, you know, with a lot of our Asian colleagues or American colleagues and partners, and especially in America or in the US, they're looking towards Europe for broader, more sensible understanding of the issue, because in the US it's currently a mess for several reasons. So that definitely has the potential to be like the flagship GDPR or others have been or want to be. And so I think for the growth aspect, to answer your question, I think it has the potential to be the driver for this. The implementation, I think timing will be very important. So I think if it really takes till 2024, then that's obviously not ideal. I mean, just from experience, I would say that we probably will have a conclusion in the Council and the Parliament by a year from now. I mean, the Parliament, for example, appoints the rapporteurs in the 3rd week of October. And then normally it takes on average, let's say 12 months. If it's a bit longer, I think we can live with that. So by the end of 2021, we should have a conclusion, and then it's up to the Commission in the trilogues, you know, to hopefully bring them together in a very positive end result. And then, you know, it enters into force. So we ideally talking about Q1 2022, something like that. And then you add 18 months to it. We're probably in the second half of 2023. And then hopefully we have all the whole regulation in place. But I think it's important that, we move faster or as fast as possible to not stretch this out and make this a political discussion, but rather ensure that it's a technical one and innovative and not stifling innovation. And there's a lot of education that needs to be done, as I mentioned earlier, with some of the parties involved, in particular in the European Parliament. I mean, we're following these debates around digital finance quite extensively and know most of the people involved in there. And there's a very broad range of expertise, from a 20th century approach of how we tackle this to a very innovation friendly one. And it will be a mix of that probably, but ideally rather leaning towards the innovation side and less to an old school financial services application side.
Okay. So you see it basically extremely positive, but you would challenge the time schedule, saying that this regulation will only be there in 2024, but companies will still orient towards it.
I think the most important thing, and that's something for the whole industry to come together and do this aligned, is just to educate as many decision makers as possible. And I'm also talking to the Commission here, which I think did a great job so far. But I think they will be crucial in playing their part here as well, to just be the honest broker in this debate and just make sure that it's a balanced debate. Because if it ends up in a debate about do we want Libra or not, and everything else is a side effect of that, then that's not ideal for the whole ecosystem. And that's a risk we're seriously running to get into if we don't balance this out.
Okay. And I think also it's important that we are fast, because especially it's in the end, the goal of regulation is investor protection and other protection. So it's not only like, because if we do not have MiCA, there will be countries who can still do whatever they like. Germany has a regulation, Liechtenstein has one, but in other countries, investors are zero protected against crypto. And with MiCA, that will change. And therefore, again, something why the law should be there sooner than later.
Okay, but 2024 doesn't seems very soon. Joachim, is there any way to speed it up, or will it just take the next years to get this regulation in place? Or what is your experience? Are companies orienting to or trying to comply with the coming regulation anyway, because sooner or later they have to apply? So there is basically this process of expecting the regulation and then complying to it, even though it's not there yet. What's your opinion on this?
I think that we have strong assets in place that can speed up that discussion, hopefully. I normally compare it with the work on alternative finance crowdfunding, where we had the draft regulation ready in March of 2018, and then the council voted finally July of this year. So that was 2 years and 4 months later, and then there was a vote on the parliament. But here we have a much stronger network, and that is also what I very much appreciate from the comments of my co-panelists. We really see here that it's not only the Commission presenting and pushing, but that we have a very, very broad ecosystem that grew over the last years in the EU, but also outside the EU, to support this common objective. And I can fully align to what has been said in order to contact and activate those people that at the end of the day take the political decision. This is not something of which one has to be scared. This is in the interest of those companies that are not only the drivers of innovation in a normal situation, but in the current very strange economic situation because of COVID-19, where many of them have been harmed in the traditional sectors. There is an added incentive in order to be specifically fast and open new ways of access to finance, of enhancing innovation, etc. So I cannot really say anything on what the timing will be. Everything has already been said by the other panelists, but I think here we are in a better and stronger situation. And indeed, the additional thing is that we also note the interest from outside Europe in what we are doing here. We are, of course, engaged in the G7, G20, every forum that basically exists on this. And many people support the approach that we are taking here. And that also plays into our in our direction, I would say. So my plea today is really for everyone who is here today listening or will listen to that, it's recorded in the future, to take up that role and to engage with everyone you can engage, convince people by concrete things that you are doing. What we do very much is we contact and discuss with startups that have very concrete examples where you can really show what makes the difference in practice of how does it work, how can it activate old industries basically in completely new ways, how can it be configured, how can it be designed, and to make people understand that what we talk about here, digitalization using crypto assets, is much, much more than putting anything traditional on a computer. This is not what we're talking about. We are talking about the integration of complete value chains, of complete systems as such, in a very, very fast and efficient way. And people have to understand where the difference comes from. And the difference is really based on that technology, and we have the political commitment on that. So please, play your role in that, but I see from everyone here that of course you're already doing, and thank you very much for this.
That sounds absolutely fascinating, Joachim, and it sounds, and I'm very optimistic here. If I read about the European Commission in the standard newspaper, I'm not so optimistic, you know, because there is so much discussions going on, and apparently it feels that everything is so slow and so on. So therefore, it's really good to hear this. We have a couple of questions coming in the WhatsApp group. One question would be, this is also directed to you, Joachim. You apparently said previously that MiCA is primarily targeting or is not applying to targeting qualified investors. So it's basically applying to companies who are addressing themselves retail investors. Can you confirm this, or can you provide a little bit more context on this?
No, what I said is that there are certain exceptions, that when you have crypto assets that target qualified investors or a specific number of investors per member state, then you are exempted from the obligation to publish the white paper, which is very important. This comes from the prospective regulation, of course, where there is a certain link, and we have taken useful elements from MiFID, from the structure, from prospective, but also from other pieces in order to not reinvent the wheel completely new. The aspect of retail investors, to me personally, is an extremely important one. And that is, as you have, of course, seen, one of the features also from the PLT pilot regime, because there it is essential that we get the retail investors directly on the platforms, give access to the exchanges and trading. And that is something that we have very, very much emphasized in the past. To be very clear, in Europe, in Europe, we do not have a scarcity of money for investments. We have huge amounts of money for investments, but we do not yet have the direct channels to activate those people that have money through more disintermediation to directly engage with those projects that they want to engage on. And that we learned from crowdfunding and alternative finance, which was extremely useful, that we want to implement here as well. And therefore, there are specific rules on qualified investors, but to be very honest, I personally hate the word qualified investors because it's, again, completely interpreted differently in all sorts of areas and member states. Everyone has the fundamental right to engage, to invest, to do whatever, even if it is with €1, I do not care, and have minimum regulation applied, and that is what we try to do here.
Okay. That's an interesting point. I think we could go a little bit more into detail here. Before this, I would like to ask Mauro one more question here, also coming up from the WhatsApp group. What do you, Mauro, would have, with your outside EU view, would have felt that it could be done better, in a better way, especially from the Liechtenstein perspective, where you have an entirely different approach? You are not creating silos of tokens, but rather like an cross-sectional change in the civil law, explaining what a token is, and that a token could basically hold any kind of right out there. That's a different approach than the issuer-focused approach of the EU, creating a couple of silos. But the word silo in the MiCA regulation is not a bad word, actually, because the silos in the MiCA regulation, from e-money tokens to asset reference tokens and so on, they are covering probably 95% of the market. So it can make sense to create these silos, in my personal opinion. But Mauro, aren't you a little bit disappointed, especially coming from the Liechtenstein country with their landmark Token Act?
I would say, first of all, Liechtenstein, I do not see that's outside. We are a member of the EEA. Therefore, if there is a regulation in the European Union, it's applicable also to us. We can change some little things, but in the end, we are, the same law is applicable for us. I'm not disappointed. What happened in Liechtenstein with the Blockchain Act was not able to make it differently, because we were not able to change financial markets law, especially because we are in the EEA. Switzerland would have been able to do it. Would it have been a good decision or not? Another question. But in Liechtenstein, we were not able to do it. Therefore, we had to change the civil law because that was possible. And now I think with what's happening with MiCA, that's the next level. And if I look at MiCA and at the pilot regime, I see a lot of similarities to what we have done on a next level. Therefore, I really like what happened, and I really like that the EU Commission looked at what happened in Liechtenstein, and I'm really proud on what Liechtenstein was able to produce here.
But what exactly do you mean? Is it basically the establishment of specific
the different roles that are defined, that in the end, even if we do not have the groups of, as you say, the silos in the law in Liechtenstein, in the end, it's the same. If it's something that looks like an e-money token, if you put in, for example, if I now tokenize euro in Switzerland, in Liechtenstein, and I would make it available to all European people, that would be e-money. I could regulate it as e-money, and the FMA would allow me to put that e-money on a blockchain technology layer. It's technology neutral. That's a little bit in me, cannot always perfectly fine, but that's exactly the point. Even if I would now do a e-money-like-ish token in Liechtenstein, that would be e-money. It would be an e-money token. So it would be the same. It would be in the silo of an e-money token. If I would put in different currencies, it would be some kind of a basket. It would be a derivative. It would be, I would say, a security token. Therefore, it's better in the future. So I like what's happening here because it makes some difficulties easier, but it makes, from my perspective, nothing more complicated. It's clearer, it's better, and it helps more to understand it. It makes more sense.
Okay, that's an interesting view, because apparently, like the spirit of these two regulatory frameworks are entirely different. You know, like where they are coming from. The one is the generic approach in Liechtenstein, and the silo.
Yeah, but only because we were not able to do it differently.
No, absolutely fine. And the EU also wasn't able to do it differently. You cannot change the civil law in, I don't know, 20-something member states. Right?
Exactly.
That's fine. Joachim, would you like to add something here from your perspective?
Oh, absolutely not. I mean, I'm fully aligned with what Mauro said, because that is the spirit. And I think it's very, very difficult to see that at the first moment. When you see this document, you are overwhelmed by what it is. You start reading it. I'm personally not spending my whole life reading regulations, but even I understand it. So it's relatively easy. And it has to be clear from the philosophy. And I've said that before recently also in Liechtenstein. We share the same approach and culture as regards the approach towards this token economy, and civil law is extremely important. But we have a limited mandate as regards the European Commission, as regards civil law, as regards taxes, etc. We have very, very limited powers as such at the European level, because that's the member states, and therefore we need to work together. And one of my colleagues put it in an interesting way to say that we as the European Commission are basically the trailblazer for blockchain. We are in the remit that we are doing here, for example, as regards MiCA, but we need the member states and also the associated countries. When I look at Liechtenstein, I'm not commenting usually on member states, certainly not in a critical way, but Liechtenstein can just be said that it was extremely positive and inspirational, and I consider everything that we do fully aligned with what is being done in Liechtenstein.
Okay, excellent. Okay, and then Alireza and Robert, question for you. We now have 170 pages. That's a very, very thick document, right? Very massive. But on the other hand side, right now, we just have a market which has 300-something billions of assets, right? So is this in balance, you know, because with 170 pages of rules, you typically regulate markets that have multiple billions, you know, or is affecting dozens of millions of people, not just very, very small financially and in terms of human beings, not the very small crypto ecosystem. Is this in balance, or is it maybe good because it's the basis for future growth, because now companies get some certainty of what happens in the next years? What's your view of this?
Do you want to start, or Alireza? I mean, obviously, if you see this document and you've never dealt with regulation, you're probably shocked because it already makes you sum up the costs for lawyers that you will have to pay because of that. But thinking about it in a long-term perspective, the problem for regulators always is they're basically chasing innovation. So they're never up to date whenever they launch something with what's going on the ground. And I think the Commission took a very reasonable approach here. They just didn't try to do it. They tried to address what's happening, but they tried to leave open channels to adapt and steer and tweak a bit, which you can see with the numbers, for example, and the criteria for stable coins and the significance. I mean, those numbers, it's very easy to update that. And then there's a lot of outsourced delegated regulations. And from what I understand, there will be even guidance mid-2021 about how to interpret this to make it as easy and digestible as possible for everybody involved. So from this side, I think they did a great job, considering that we're basically defining here a new asset class, which is not something that happens every week. This is rather historical. So I think from that perspective, it's very positive. As said earlier, I think it's about the details. And if we get them right, then I think it's a very positive approach. If we get them wrong, it could also have the opposite effect. I'm optimistic that we get it right, because there's a lot of smart people involved in that. There's the backing of the Commission that wants to get it right. And I think also a lot of the authorities in the member states, at least technical experts, understand that there's something at stake. And the political level, at European level at least, understands that it's a huge opportunity for Europe to be like the market lead on blockchain technology and the innovation it brings. So I stay optimistic. I will make sure that we will be able to stay optimistic, and I think all industry will do the same. So
okay, that would have been already nearly a nice closing word, but we are not finished yet. Alireza, what's your opinion here?
Thank you, Philipp. I will do it short so we can finish in time. I think that the MiCA and also the quantity of pages is totally fine. I mean, putting in mind that when the first documentation of MiFID came out, I think in 2015, we had around 2,400 pages of documentation just for MiFID. But the question is true, because it says that we need actually a risk-based approach to regulate crypto assets. When you look back to the 2019 January paper of ESMA and EBA on crypto assets advice, there was a nice paragraph where it was about financial stability, where it said that at that time, the market cap of crypto assets was around 160 billion euro, and that market cap of the S&P 500 was 22 trillion euro. And most of the S&P 500 participants are unregulated institutions. And therefore, we will need to have a risk-based approach. And I think the MiCA is a risk-based approach, putting in mind that we do not only have the MiCA, as Joachim said correctly, we also have the pilot regime, for instance, which aims to enable the market participants to operate DLT market infrastructure. And the overall objective of the pilot regime is to remove actually regulatory hurdles to issuance trading and also post-trading of financial instrument in crypto assets. Therefore, I believe that we have an overall package which is in that respect risk-based for the crypto assets trading and dealing with crypto assets.
Okay, yeah, this sounds good. Sometimes I wish to be a lawyer to also benefit from the upcoming demand for legal services, but I think actually, it's pretty easy. You can also buy Bitcoin and somehow benefit from this fundament which is being laid. And then if people are pushing their money into this ecosystem, then of course crypto assets will rise. That's what of course is maybe the wrong word, but the likelihood is quite there that basically the entire blockchain ecosystem is benefiting from it. A last question maybe to Joachim. You mentioned crowdfunding. If you look at crowdfunding in the last 10 years, it didn't work as well as expected, right? For multiple reasons, right? Do we have a new chance with blockchain to basically make crowdfunding, especially for SMEs, working in a more efficient, better way? Maybe also finding different financing instruments for startups. Maybe the crowdfunding instruments we saw have not been the best ones out there, right? So do we have another chance to kick off crowdfunding in a larger, better, broader way?
Definitely, Philip. And I'm fully convinced that what we do here in terms of crypto asset is a sort of crowdfunding 2.0, because crowdfunding was a game changer, not on the market, but certainly for policymakers and for regulators. Remember the previous financial crisis where the term alternative finance was coined because we set our hope into something new. We were a few years early in order to come with what we have come here, but the whole principle of the crowd economy is the essence of what we now discuss as the token economy, to give access to retail investors, to have very small projects that can benefit from these things here, to have micro projects, production, leasing, everything that is in industry, where so far the fixed cost from the administrative or payment side has been so high that the business model simply didn't work. Micro mobility, everything that is connected. Now that will be made possible with blockchain and with also what we're doing here. And that is a tremendous boost that will work on that. Also, crowdfunding was a game changer for regulation, because remember that for many, many years, we did not regulate crowdfunding at all, because we wanted to see how the business models evolve. There's a merit in competition among those business models. And therefore, I see it also from the crowdfunding community that they take a big interest in what we're doing here. They have a lot of ideas. The problem with certain parts of crowdfunding, of course, was, to be very short on that, that equity crowdfunding was prohibited or very possible in a number of countries, and that most of the lenders at a certain moment in time wanted to become banks. And this is what we try to avoid here. And I think we set up a framework which makes it very, very attractive for people to pursue their business models without looking back to, I actually want to be something completely different. No, you want to be precisely where you are and look forward. And this is why crypto assets will take crowdfunding with them to produce something new, which we don't know yet. The market is moving so fast and recombining stuff. I don't know what will be next year on the market, but it's definitely having a crowdfunding element included.
Okay. Well, the digital euro by the European Central Bank will not be on the market next year. This is what we already know. Therefore, I think we should talk about this topic the next time. But for now, I think the MiCA discussion today was very inspiring. It also helped me a lot, for example, to understand Liechtenstein in comparison to the planned EU regime. So therefore, thanks a lot. In case somebody is bored, then please read the digital euro paper from the ECB. It's not very exciting, to be honest. It's a little bit boring, but anyway, it's also good stuff for providing at least an overview, not more, but providing an overview of what's going on in the digital euro. Seeing that it's fascinating to see multiple domains, you know, like digital securities, crypto asset, and also the digital euro, all these topics moving on a very, very broad front towards being launched to the market. Therefore, it's really fascinating to observe all these domains which are now picking up these days. Okay, thanks everyone, and have a very nice day. And yeah, looking forward to see you soon again. Thanks.